Good morning, all. Hope your evening was better than planned, enjoyable. Nice one here in Wichita, not too cold, not too hot. We do have moisture in the forecast, and looks like it'll cover the eastern third of the state for the next 4 days. Off and on, the heavy rain will be south to us, but we'll take all the moisture we can get. The northwest part of the state could use some moisture too, but it is the time of the year where we're dependent upon cold fronts to push south to create the engine with a warm front drifting back over it. And the stronger the cold front, the farther south the rain goes. So it is late fall with winter fast approaching, especially of late. The pictures coming out of the Buffalo area of New York are just, looks like around the Valdez Port up in Alaska sometimes when they have these 6, 8, 10-foot snows. And we're not equipped to handle 6, 8, 10 feet worth of snow. They are in Alaska, but it's still a big job when you get right down to it. So we left yesterday with anticipation of Obama new immigrant policy where he's going to legalize 5 million illegal immigrants, give them work permits, give them access to a lot of our social programs, going to increase the visa program for engineers and workers in the tech world, which will lower their costs of employment and will hurt the chances for people that have gone through the computer sciences, et cetera, in the United States. There was an interesting study published yesterday on how the illegal immigrants have affected employment in California. And the people that did not graduate from high school had seen over 5% decrease in their wages. Surprisingly, those that graduated from college had seen a decrease of about 4.9% in their compensation. So the legalization, the bringing in of 5 million more people, and he's already started with 1 million that's been done up to this, equals all the job growth we've had, supposed job growth we've had since 2009. So it's a big slug. It's a big pig that's going to enter the employment python. Big one to swallow, and it will definitely curtail, put a lid on wage increases at the low end of the market and in the engineering part of the market, the technical side of the market, which is why the tech industry has supported this policy. More to the bottom line for the owners. Okay, the next piece of news, that news had very little impact on the market. The market's just basically moved sideways. Well, we've got 5, 10, 11, 15 million people here. They're already making some sort of a living. They're already, plugged into our school systems, our welfare systems, et cetera. So not much change there. What did impact things was Chinese surprise rate cut for most of the world. And that took the stock market up 12 points to new highs. Make for a fairly easy play this morning if we don't extend the range higher. Then there'll be a short as people take profits, and then we're going to find out where support is. So China, the rate of growth has been decreasing from the 10 to 12 as reported, down to 7% now. Bankruptcies, the largest company in China's history a steel company declared bankruptcy here this week. There are stories coming out that the shadow banking system is collapsing with companies unable to make loans. So China cut their interest rates. And they're doing what everybody else is doing. And I mean, once you start down this path, it's very, very difficult to stop, because anytime you even hint of stopping, the markets just explode in ways that are not helpful to at least keep your current economy going. So stock market's higher, financial sideways, gold sideways, not moving too much. The euro down a lot. The yen pretty much where it has been, because They've been doing this longer than anybody to their currency and their economy. And crude oil is up off of anticipated growth in Chinese demand. So the financials normally would be off a little bit because of what's going on in equities, but they're not. And the reason for that is option expiration. And yesterday, the play was in 127 calls and 126 puts. Mathematically, that makes the close today at 16. As you recall, yesterday morning we started out saying that look for a close today and yesterday in the 126.16 area. And yesterday's close of the day session was 126.18.5. So option expiration, I think, is driving the market. Should have good support here at 8.12. Should have pretty good resistance at 20 to 24. So our sells 19 to 23. 27 to 31. On the buy side, 13 to 9. Would like to get it done closer to 9. Let them get stops beneath the overnight session low. Don't know if we can, though. But we'll give ourselves a little flexibility there than 1 to 5 for buy 2. There is no domestic news today to drive the trading. 3 Fed governors will speak. Each one of those, when they pick up the mic, can impact prices. We just have to be cognizant of that. Most of them will probably be reiterating current Fed policy. Don't think that we'll see any trial balloons floated today. The Fed's pretty much getting what they want right now anyway. No need to support equities. They've made new highs. No need to talk about interest rates. They're low right now, and they're talking about raising them sometime, but they've been doing that since the start of summer. Okay, looking at the ZB, same situation now. Option expiration favors a close at 142. 141 puts, 143 calls were the play yesterday. The way the market is trading right now, I'm going to guess we're going to close this thing in the 20 area. So we have a seller 28 to the buck, and then we've had a seller 4 to 8. So our sell is 27 to 31, and then 3 to 7 for sell 2. On the buy side, the low is 12, so 9 to 13. We've been pretty lucky of getting a shot at the number 2 level, so this buying against the buck or the 1 to 5 area would be the preferred buy, and that allows us to pick up support over in this area. It's where it's blue. Selling 27s and above is where it's red. 23 is kind of a question mark. Don't know if that's what we're looking at. So this resistance might be, as opposed to 28 to the buck, it might be 24 to 28. We'll just have to see how it plays. And we'll make adjustments as the market unfolds or develops. You know, what we really need to increase the volatility is a two-sided market. And every central planner in the world would like to work with zero volatility and one price, but there wouldn't be any interest in the markets then. You wouldn't have any incentive to be a buyer or seller, and so they can't really get it all the way down where they'd like to get it. But right now the Fed's got it pretty good. If the economic facts don't support the market, they'll rhetorically say something that'll rally the stock markets. Liquidity, while they've cut QE3 is gone. When you look at the M1, M2, and M3 figures, there's plenty of liquidity out there beneath the surface, just not in outright purchases or advertised outright purchases. So not a lot has changed as far as liquidity goes, and the Fed's asset balance sheet is still growing. Okay, gold, China is the next step out of China is that they will officially devalue their currency. The market's probably going to take care of that for them a little bit in the price of gold. So China's announcement overnight with the expected devaluation of their currency coming is supportive for gold, but gold didn't really react to it very much. Our 85 to 87, which is an area that we've liked to buy the last couple of days, held as support. Right now, we're probably going to have support in the pretty good support in the 92, maybe 93 area. So this high volume area right in here will make 93, 95 buy one. And then 85, 87 for buy two. I don't think we see that this morning. May have to pay up. We may have to get in long above 95. Stops above 1200 right up in this area, so we'll make 3 to 5, sell 1. And then 8 to 10. Try to get it done above this high volume number right here for sell 2, and the market's moving right now. So we're going to hit our sell 1 pretty early in the session. Market is pointed higher. You put all this together, we're dealing with a P. Forces of inflation, the reasons to buy gold, especially if you're a retail account or a central bank account, have increased. The Swiss referendum comes on November the 30th. Every Monday or Tuesday we deal with a new poll that'll tell us if it's going to pass or not. It'll be interesting if it does pass to see how the Swiss government pencil whips that deal. The euro got hammered overnight. Draghi had a speech early this morning at 3 when that guy picks up the mic. The markets react spectacularly, and they did. Again, it's basically in any and everything that we have to do to support our economies, and we'd like to see the euro lower, and we're going to do everything in our power to make sure the euro goes lower and the bottom falls out of the market. You can see that in the selling started. He picked up the mic at 3 a.m. Eastern, and that's when the selling started. So we're back down to our 124. Goldman had said 125 for this year, 120 even for next year. We can make 120 even before this year is out. The previous low is 118. So the European Central Bank continues to at least talk the euro down, and hopefully they don't have to spend any money. Okay, last rotate up started at 40, stopped at 40, so 40 to 50 is sell 1. It's where resistance is. Get through that. We have these single prints up here, 65, 75 will be sell 2, leaning against those single prints. On the buy side, 24, 24, 10. I think it can go a little bit lower. Get stops beneath 124, and then 23.75 plus or minus. I think this contract is headed for new lows on this off the speech by Draghi. Again, it's just a great long-term play, being short the euro. It does rally, but these rallies, these 1 to 2 day rallies, are selling opportunities, in my opinion. Okay, crude rallied. China's economy is going to come back. They're the ones that have been taking advantage of these low oil prices. I think the news reported last week that they had bought 36 very large cargoes. Those are at least 1 million barrels per boat, per very, very extra large, extremely large crude carriers. Not saying they would play futures. Yes, very large crude carriers, and then there's extra very large crude carriers. But imagine China out there taking advantage and buying all these crude carriers in the cash markets, and then coming out and making an announcement like this. These people play the futures. Russia used to do it when I was active in the market on gas oil. They declare force majeure. Couldn't make their gas oil shipments to Europe, and the price of heating oil and gas oil would go nuts. 2 or 3 days later, cargoes magically arrived in Rotterdam. So China coming out and buying up, soaking up all the extra transportation, filling them up with crude oil, sending them towards China. They come out and make this announcement several weeks later. Yeah, I mean, it's the way that game is played by those people. So just have to be aware of that. So where are we long term on crude? Okay, taking a look at it structurally, we've got this spill from 79.50, 78 right here. So this 78 area might prove to be pretty good resistance. That was the start of the down distribution. If we go through that, then we're really looking at 79.50, 80, this area, right up in here. And the low volume number is 79.50. And then our just above 78, say 78.15, 78 and a quarter. So 78 and a quarter ought to be pretty stout resistance the first time we're into it. Has anything really changed? Will China's economy start growing now? Turn on a dime? No. Is Europe's economy going to start growing and turn on a dime? No. So what have they affected right now? Probably haven't really increased the demand for crude all that much. So I think a lot of people will view this as a selling opportunity. So let them go get stops above today's highs, 78, 78 and a quarter. Sell one, then 50 to 75, sell two. If we can't extend the range, can't take out this 70, this high right here, then we're going to have to get short lower. Breakout came from 76.75 and then 76.50, so retesting that. Breakout 76.50 to 75 will be a buy 2, and then 77 and a quarter will be buy 1. Okay, yesterday, I believe Joe asked how high, what are our trading targets for the E-mini? And I said, well, probably 75. We also have talked about this week that 350, 68.50 have been the numbers the market has stalled at. And we had a high of 53.75 that first rotate up. And then on the E-mini, right now, the overnight session high is a 67.50, and we'll go look that up right now. So what that allows the large players, those people like gun stops that manipulate the market, it allows them to get every stop they can above market numbers. And so, well, we made it up to 69 in the Y period here. So I think 75 is the trading target. So that's 73.50 is an area we'll take a look at. So right now, 70 is going to be initial resistance. 70 to 75 is where resistance is. So sell one will be 69.71, but I think the better play comes trying to get it done in that 73.75 area. So let them take out that 73.50, but that is, we are at resistance right now. That's where the market will open. Don't see any reason for it not to trade higher. So work in the 75 area, plus or minus, I think is the better trade, just because it is a round number. No news to drive today's trading. It's day session is almost guaranteed to be higher as the shorts have to pay up and come out the market. Now, what I think is interesting is that we had that very, very strong close late yesterday, and don't be fooled. Some people were aware that something was coming out of China, and they have the normal support of the market late in the session. that takes it to new highs or very close to it, plus probably somebody knew what was coming out of China. Okay, London's low right here is basically 55. So we have a breakout at 56 and a quarter. The next breakout came from 59. And we're currently trading what? Last 68. So this 63, 65 will be buy one. Let them get stops below 65. And then our breakout, our 59, 61 will be buy two. So basically I'm seeing support 60, 65 to get started. And then really, really good support in the 55, 57 area. So letting them come back over the next several days, let them retest this high right here. Having a limit buy at 54 to say 54.50 to 55.50, I think is a pretty good long-term play. Nobody's going to go short into Thanksgiving. The tendencies on Thanksgiving, Black Friday, are for the market to trade higher into that anticipation of a good Black Friday. So the bias is definitely to the high side into Thanksgiving. Okay, it'll take about 20 minutes to get everything up and posted. Get busy on that now. I'll see you as soon as I can.